China could cripple Australia. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article discussing just, well, the impact China could have on Australia's iron ore industry. China could cut off Australia's $136 billion iron ore exports in just a few years, according to analysts. Now, before we have a look at that, let's look at a quick summary of the iron ore market. And, well, right now it's trading at $183, so it looks like it's come, have we peaked and we're heading back down? Now, the Australian government has budgeted on iron ore prices of $55. So, not even on this chart, everyone, what the government has budgeted for, which is a good sign. So iron ore is doing really well. I'm hoping this will lead to some capital expenditure for iron ore miners around Australia and maybe some opportunities for people working in those industries and in those regions. That's a good thing. Fantastic. Make hay while the sun shines. But those are very high prices, guys. Now, iron ore exports in the world, $128 billion in 2019. It's grown since then. We're the top exporter in the world, guys. Most of the iron ore in the world is coming from Australia. Brazil is second. Then you've got some from South Africa, some from Canada as well. Biggest importer is China. And then you've got Japan. They're the biggest ones. I know people are going to call for the iron boomerang. And I should probably do a video looking at that idea, trying to manufacture iron ore here in Australia, or steel here in Australia, in a large scale. But I'm just so skeptical. I mean, we can't even open up a mine without greenies traveling thousands of kilometers, probably in beat-up old Combi vans and rubbish, causing pollution, to protest it. That's the country we have here now. We're not in my backyard bunch of whingers who don't want to get anything done. Or at least that's how it feels like watching the media. You can see the share of exports that Australia has grown over time. And, well, here's the net iron ore trade. You can see China is most certainly the biggest importer of iron ore in the world, everyone. And we're one of the biggest, well, we are the biggest exporters. Here's the tariffs that are in place. So there you go. Mongolia is protecting their industry. So let's have a look at how China could cripple our iron ore industry. And really, that would have an impact on Australia. Should we be worried, or will the iron ore just flow to other countries? That's the question. So, when it comes to saving Australia's economy from the grips of the pandemic, recession, lockdown recession, we should really start calling it lockdown recession. It's hard to overstate the importance of iron ore. Buried beneath the red earth of West Australia's Pilbara region, our biggest export is currently bringing in $136 billion a year into our economy, according to the Treasury. It accounts for about 20% of all our exports, and the iron ore we ship from Port Hedland and Dampier ports in Pilbara is worth about 5% of our entire GDP. China, which buys 60% of our iron ore, is buying it up like never before to create steel for its massive infrastructure projects in a bid to recover from the pandemic. And despite China trying to hurt our exports over the past year, they have had no choice but to carry on buying our most valuable asset. This is because production from the second biggest exporter, Brazil, has been hit hard by a dam collapse and the pandemic, leaving Australia almost unchallenged in the market. The basic economic laws of supply and demand have come into effect over the past year as China pumps up demand while supplies have been tightened, meaning that the price of iron ore has hit an all-time high. Just a few weeks ago, spot iron ore reached a new high, nudging $240 a ton, passing a significant cost onto the Chinese businesses that are reliant on steel and in turn pushing up prices of some goods for everyday Chinese residents. However, a lot has changed in the past few weeks. China has vowed to do everything in its power to drive the price of iron ore down. As a result, the price has fallen about 20% from the high recorded just a couple of weeks ago. You can now buy it for less than $200 a ton, and analysts have suggested it may drop even further by the end of the year. Although some economic experts have suggested China's plan to drive down the price of iron ore will backfire on them, others have predicted a bleak outlook for Australia. Capital Economics reportedly told an investor briefing this week they expect China to increase its use of recycled steel as it moves to curb its carbon emissions, which will enable them in just a few years to cut off Australia. In the short run, China has no choice but to grit its teeth and keep buying Australian iron ore, even as bilateral ties continue to fray, Capital economist senior China analyst Julian Evan Pritchard said, according to AusBiz. Here's the question, guys. What legacy is Australia going to have from all of this iron ore export? Bunch of houses? What else? So, I mean, there you go. Look, there's the global importers. 2020. But this dependency will diminish over time thanks to increased supply from other sources, greater use of recycled steel, and a structural decline in Chinese steel demand. It may be feasible for China to cut off Australian iron ore shipments by the middle of the decade. If that were to happen, there would be a devastating haul in Australia's finances, meaning federal and state governments would take a major tax income hit, and the services we as everyday Australians rely on would suffer. Capital Economics senior economist Marcel Theliant recently published a note saying we are already seeing the effects of China's plan. As China's property investment slows and developers face tighter financing constraints, we expect the iron ore price to fall to US 140 by year end, he stated. And there you go. There is the price of iron ore over time, everyone. Downward trend in iron ore price. Over the past week, the price of iron ore has begun to tumble. On May 12th, prices reached an all-time high of $237.57 a ton, but in less than 2 weeks, they've dropped close to 20%, spooking traders around the world. 2 weeks it takes for a commodity to drop 20%. Look at crypto, everyone. That's 2 hours. It's a different world there, isn't it? ComSec said the price held steady this morning at US 191.65 a ton, but the trend appeared to be a downward one. This is because China, particularly over the past week, has been talking tough and reiterated its plans to drive down iron ore prices. On Sunday, the National Development and Reform Commission, China's top economic planner, along with 4 other departments, held a meeting with industry leaders and vowed to severely punish excessive speculation, price gouging, and other violations they said help lift the price. Regulators would adopt a zero-tolerance approach towards illegal activities and strengthen regulation of abnormal transactions and malicious speculation, the NDRC said in a statement. The following day, iron ore dropped US 11.85 a ton, or 5.9%, to US 188.25 a ton, following further sharp drops at the end of the week. In a worrying sign for Australia, analysts have suggested to the Australian Financial Review that iron ore may not trade above US 200 again. NAB head of commodity research Lachlan Shaw told the publication the warning signs were there before prices started to tumble, and that it's clear China is not messing around. Their rhetoric stepped up dramatically last week with the State Council and comments that speculation needs to be cooled, he said. High and volatile prices are well and truly in the spotlight of the government. Their focus has sharpened. Morgan Stanley last week said iron ore prices had overshot what could be explained by the fundamentals of supply, demand, inventories, and marginal costs. We've long highlighted the key risks around elevated prices would be some reversal of the bullish market sentiment, and we're seeing that reversal now, Mr. Shaw said. He added there was no question the price could tumble further. China warns of Australian pain. The skyrocketing oil prices are putting China's economic recovery from the pandemic at risk, with companies and everyday Chinese citizens bearing the cost. The Chinese government mouthpiece, the Global Times, said companies have already raised prices for a wide range of products, including refrigerators, washers, and bicycles, citing rising costs. However, analysts told the paper that China's latest moves to crack down on speculation and other market manipulation is about to send chilling waves across the globe. The Global Times singled out Australia as the nation that will be hit hardest by the crackdown, given iron ore is such a dominant force in our exports, and accused us of profiteering from the rising prices. Well, who wouldn't profiteer from the rising prices? Among the most affected could be iron ore exports from Australia, which has benefited massively from these sky-high prices in its main export, emboldening officials in Canberra to continue on their relentless provocations against China, the paper said. While China's reliance on Australian iron ore will likely continue in the foreseeable future, despite its efforts to diversify sources, sharp drops in iron ore prices would mean heavy losses in export revenue for Australia, which is already seeing a decline in trade with China in areas such as wine and seafood. Well, what about tourism and international students? They're one of the, they're a big part as well. they're going to have a drastic impact on a lot of people too. It said iron ore prices dropped $9.25 per ton since Beijing took action last week. It said that could translate into a loss of over $2 billion in extra revenue for Australia based on the amount of exports to China in the first 4 months of 2021. Flaws in China's plan. The price of iron ore is dropping as Beijing implores its steelmakers to explore overseas ore resources and widen their sources of imports. However, analysts have pointed to flaws in the plan, saying China would need to develop hundreds of new mines in a short space of time to keep up with steel production. China has been the main driver of global metal markets for more than a decade, and they're showing no signs of slowing down. Research house Capital Economics estimates that Chinese steel production rose by 7.5% in April compared with March, while Capital Economics believes April's production level may prove to be the peak. Australia's miners have seen strong activity continue into May. However, China is under pressure to reduce its carbon footprint. Well, that's going to be a mission for them, and promised to take steps to do so, which is at odds with their recent ramp-up in steel production. Beijing started the year with a plan to drive steel production lower in 2021 to reduce pollution from the sector, which is estimated to account for 15% of the nation's total emissions. This clearly isn't going to plan, with steel production hitting record levels, but the expectation is that the Chinese government will attempt to put the brakes on booming steel production in the second half of the year. Given Australia sells 60% of its iron ore to China alone, this could mean we take a serious economic hit. Australian mining insiders have told the AFR they are weary of what could happen in the near future if China goes hard on its interventions in the steel market. Global demand feeds industry optimism. However, they said the level of demand across the rest of the world is so strong there's no need to panic. If China cuts steel production, someone else will do it. If China cuts steel production, someone else will do it, a source inside one of Australia's biggest miners told the publication. Feeding that optimism is the fact that the steel market around the world is red hot right now. European steel giant ArcelorMittal this month lifted its steel prices for the 12th time since November, taking a ton of hot rolled cold steel in Europe to €1,050, up by more than 80% over the past 7 months. Since I've got so much steel going in my house, I hate reading that. I really do. Meanwhile, Nucor, the biggest steel maker in the US, is taking the stock market by storm and struggling to find workers to keep up with its expanding operations. Well, you blame Biden for that, mate. Even COVID-19 ravaged India is going hard to increase steel exports, which rose about 26% in the March quarter, according to S&P Global Platts. But the director of the Australian-Japan Research Centre at the Australian National University, Dr. Shira Armstrong, told news.com.au, if China and Australia try to diversify away from each other, then it will have serious consequences for both nations. He said the idea Australian mines could simply find other nations to make up for iron trade we do with China sounds fanciful. It would be unrealistic in the short term and likely in the medium and long term for both nations because it would come at a cost neither governments or mining companies would be able to bear, he said. Government intervention could lead to more uncertainty. Always does, doesn't it? He said the international market between Australia and China is one that has delivered. There is no good track record when governments try to intervene in the market, and China's effort could lead to more uncertainty and higher prices there, he said. None of the policies will work because they will lead to a huge hit to China's construction sector. On the flip side, for Australia, he said the demand for iron ore elsewhere in the world simply isn't there, especially with prices as high as they are now. The latest figures show that China produces over half of the world's steel, producing around 996 million metric tons in 2019. The next highest was India, which produced near 9 times less, just over 111 million metric tons. Armstrong said it would be best for the governments of both nations to stay out of the market. We had a very beneficial relationship with China that's driven by market fundamentals. If both countries start looking to retreat from the open market, there's a pathway to lower living standards in both countries, he said. China's reliance on Australian iron ore, which has resulted in massive financial windfalls for our biggest mining companies, have come despite heightening trade tensions between the two countries. So an outright ban is unimaginable. According to Chinese state media, NDRC spokesman Jin Zhendong blamed Australia for damaging trade relations. Consequently, we have to make the legitimate and necessary reaction, and Australia should bear full responsibility for such moves, he told the conference. We urge the Australian side to treat China-Australian cooperation objectively and reasonably, to treat Chinese companies fairly, end the disruption of bilateral trade and investment cooperation, and take actions to bring forward bilateral relations for healthy development. But despite Australia and China's icy relationship, an outright ban on iron ore is almost unimaginable. Instead, Beijing could resort to other tactics to make the export of iron ore more difficult for Australian companies. Energy research and consultancy firm Wood Mackenzie told Bloomberg earlier this month. While an outright ban would be almost unimaginable, various forms of restrictions, delays, or increased administrative burdens on Australian iron ore imports could yet happen, Mackenzie said. And here's our top 25 exports to China in 2019. There you go. Iron ore. So there we have it, everyone. The risk that China presents to our iron ore industry and to Australia. What are the solutions, guys? What are the solutions? Well, one would have to argue it is diversification. I'd argue we need to look at special economic regions to reduce level of government intervention if you want to have this iron boomerang, guys. If you want Australia to start becoming a steel manufacturing country, maybe there needs to be part of the country where we don't let any greenies in. Hey, there's whole parts of the country where you can't go in based on your race. Why not on your political ideology? That's Australia, guys. We have that here. I'm not kidding. That exists. What do you reckon? Can you see Australia becoming a steel manufacturer or any significant capability? Let me know your thoughts on that one in the comments, guys. As always, like, share, and subscribe to the channel. If you're a fan and enjoy the content that I create here, there are a few ways you can support us. Join us on YouTube or Patreon. Support us using our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time. Bye for now.